Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, July 12th. All right, so we did get some volatility. I just want to show you the chart and what you guys, for those of you who are not subscribers, wanted just to show you what we were looking at and what we're doing here at Trading Market Technicals on our daily research videos and our Pro Trader Premier videos as well. We had issues about the emails that were put out by Donald Trump's son, talking about impeachment, which obviously that was a little far-fetched, but nonetheless, market sold off in 15 minutes and rallied all the way back. And this is where I was saying, most of the subscribers, when you see a large candle like this, something like this as well, this is what I've been saying for months. The big money, smart money guys want this market to go higher. They are so long in the tooth, they want to get every retail investor involved in this market at these highs, and that's what's happening here. Every time you see them, all of a sudden, out of the blue, we have another big push up. That was a buy program here and a buy program here. You can take a look at the tick yourself and you'll see. And then what happens, as soon as that happens, they smash the VIX down, and that produces a reversal and puts all of the shorts that were short here now in the red. And that's what they want to do. They want to get all of the short players back into the market so they can squeeze these shorts and push this market higher for the fifth and final leg up, guys. We are in a fifth leg up of this bull market run, which should end somewhere around August through October. Again, it's still early, but that's what my projections are here at TMT. We need that push up, and that's all sentiment driven. You can throw all of the indicators out the window. We have all of the red flags out there. We talked about it for months and months, but everybody is buying stocks, and that is exactly what they want, so they can get out of their longs. I just wanted to show that to you because here at TMT we've been showing that. We also have a map of the markets that we put out, and we'll put that out again, seeing where we are in that map of the market, where we might be topping. So ES right now pretty much really a dismal trader. I mean, any of the indexes, the equity indexes, the 5 indexes that we cover, have really not produced, unless you're buying really extreme lows or you're selling highs. This is just a horrendous type of trader in all of it, in all of the indices that we follow, and that's what's been happening the last year and a half. We go sideways for months, we break out for 2 to 3 weeks, then we go sideways yet again, and this is no different. I was expecting a rally up into July, and then sideways consolidation at the highs, and then we start to break lower. So it looks like we're doing the opposite. I do suspect that we would to break higher here. I don't see no reason not to. The Trump trade is over. He hasn't done anything, and the markets are still at its highs. Now they're hoping. So the markets are hoping that Donald Trump's going to do something. So that infrastructure play is gone. Everything that he promised in his campaign, he hasn't pulled through at all. And a lot of the investors are obviously very impatient, and rightfully so. So we'll see what happens coming into the week or so in July. But here are your levels for today: 24.98, 24.45 will still remain the same. Lower end of the TMT proprietary price channels are 24.09, and then of course round lot 2400 in the ES. Nasdaq. Looking at, we did get a buy signal here in the RSI. We're not quite there yet, probably today if we do rally. This is where I think the NASDAQ is going to get everybody short again, or at least have gotten guys short, and it's trying to push this market a little more higher. 57.80 would be an ideal situation to look to re-enter short. Why? That comes right underneath the underbelly of the downtrend line here of lower lows and lower highs. So we hit it here, we hit it here. Why not hit it here at 57.79? And that should put us right back into sell mode in the Nasdaq. The Nasdaq valuations are through the roof. We talked about this, and this is all going to end at one point where we get this corrective rally. And we're always looking for pain, right? We're always looking to say markets are made to fool the masses. I say it all the time. So which is the easiest trade right now would be everybody short here, okay, now covering and pushing this market higher. So I think we get a little bit more move to the upside, and then I think that should solidify the move for the next leg lower. Now, crude oil, we talked about crude oil. We analyzed our commitment to trade reports. It's been 5 weeks now that the producers are actually reducing their hedge, but not as significant as I had expected to. Now, We had an API number that came out yesterday at 4:30 that had a significant draw. We are in the driving season mode because we're in the summer mode, so we're going to expect a draw pretty much every week. We're going to look for a draw every week going into the summer months up until September. That should put a corrective rally back into this low where we will look to short right around the $47.30, $48 in crude oil. In the meantime, stick to the long side. Today is going to be the Department of Energy reports that come out at 10:30 Eastern here in the United States. So keep an eye on what it says, and if it matches what the API number was, we're going to get a nice little rally going into today. Keep an eye on these oil stocks such as APA, APC, HAL, BHI, SLB, EOG. You could even play the ETF, the XOP, the oil and gas ETF, and the energy ETF, the XLE. So keep an eye on them for today's trade. Gold, I really like gold here. I do think that it's on its second stage bull market run. It's coming into seasonal strength right around sometime this week into next week. It doesn't have to happen at the same time. But if you can see here, we're trying to base here. We're at 12.16 and change. I think we get one more flush, and I think that's going to put a higher low from this previous low down here, and I think that we could start looking to buy some stocks. Like Nugget, NUGT is one of my favorites. It's a triple just to trade for the day. Do not hold them. They have contango issues. They just deteriorate every single day that the market doesn't go anywhere. So if it's going against you, it's going to go against you double the amount, okay? Next is going to be GDX, and really GDX did not tell us. Usually GDX goes first before gold, and it did not solidify that we're actually headed higher. So I want to see GDX move higher. I want to see it take out the 22, 86, 85 area, and then that should get us right back up to the top of the this large symmetrical triangle that we have here, okay? But until then, gold is very vulnerable for a push lower. Now, yesterday it was up because the market sold off for 15 minutes. Same thing here with bonds. I think bonds are very vulnerable to the downside. Rates are rising and here to stay. Bonds does not like an interest rate rising environment. We all know that. It's inversely correlated. So if we get a corrective rally, maybe back into the 152-ish area here, I'm going to look for an area to short the ZB. But these are your levels for today's trade. Next is going to be TLT, same thing, pretty much the 50-day moving average, the 20-day, and then the 200. Those will be your three areas of resistance. 126.37, 124.20 is your 50-day moving average, and then of course the 21-day is 124.63. Support will come in at 123.11, 123 in TLT. Spiders, you can see here, we're really holding that, clinging to that 50-day moving average. That's going to be really important for today's trade, along with this this uptrend line here. 50-day moving average 241.11, 243.78, and of course 245 will be your areas of support and resistance for today's trade. IWM, just a real ugly trader. We talked about this many times. I totally stay away from this Russell 2000. 138.85, some of you do trade it. 138.85 support, 140, 146, and then ultimately 142, 143. 142.88, 143 will be areas of resistance. This is a secondary leader, not leading. It's a concern, but it can play catch up, okay? Transports did well the last several days. Yesterday never really recovered after the sell-off, so this will be interesting to see if we can move higher. If we can take out the 175.20, that'll help the bullish case that we get that fifth and final capitulatory top that we're looking for, and then we can start looking for some shorting opportunities. Not until then. Follow the trend intraday. That's going to give you a much better advantage than looking to start fading tops in this crazy market. 121 EMAs, 170, 110. Last is going to be your Qs, and again, same thing like the NQ. We're just kind of back testing here. 140.58 would be an ideal number here to look to re-enter short. Again, not because price is there. We need a sell trigger or follow your sell trigger when price does get up into that zone area, okay? All right, guys, hope it helps. Have a great day. Be careful out there. It's a very dangerous market that we're in. We have to be very selective in our trading. If that means that we have to step aside because we're not seeing anything, that's what a professional is supposed to do. Let's make sure that everything lines up. And remember, you do not have to trade every day, especially in this market, which is trying to find either a top or one more push higher before it does top. Have a great day. We'll see you tomorrow.